This is the Hacking Real Estate Podcast, Episode 2.
If you are super, super good in one area, then no matter what the economic conditions are, you should be able to make something happen.
Welcome to the Hacking Real Estate Podcast, where we dive into the stories of seasoned, hands-on, and tech-savvy real estate investors. We'll learn the strategies and tools they use to maximize returns and minimize hassle, all while navigating the rapidly changing real estate market. I'm your co-host, Brandon Hall, and managing partner of Hall CPA, and I'm sitting alongside my co-host, Vikas Gupta, CEO of Azebo. With our combined 15 years of experience in real estate investing and entrepreneurship, we're here to help you up your real estate game. Let's get hacking. Hey everyone, today we are joined by Sean Pan, who's an engineer turned real estate investor. He makes a lot of great content on TikTok, YouTube, and Instagram, and he has over 2.7 million followers, which is pretty incredible. Sean, welcome to the show. Give us a little background on how you got to where you are today.
Yeah. Hey, Brandon. Thanks so much for having me on. As you guys know, I'm a real estate investor, content creator, former engineer. Basically, where it all started was I was an engineer, just graduated from college, super excited to start my career as an engineer for the next 30 plus years. And while the work was cool, hearing my coworkers complain every single day about how they weren't satisfied financially, it made me really sad. These guys are engineers, people that I was going to be in the next 30 years, and they couldn't even afford to buy a home within 30 minutes of work. They would have to commute all kinds of crazy ways. They would complain how the company wasn't giving them the raises they expected, the bonuses, the prestige. And I figured, I can't be here. I have to try something different. So I tried a whole bunch of different businesses and eventually fell into real estate. Real estate to me made a lot of sense because you can buy a property rents for more than the mortgage, the insurance, property taxes, and you get to pocket some every single month. So how hard is it to just buy more of those and eventually earn enough cash flow to then sustain your lifestyle? So that's the long and short of how I got into real estate. And then eventually, over a few years, I understood how real estate worked. I was doing some profit from it, but I wasn't feeling really fulfilled. I felt like I was the only one winning here. So I wanted a way to give back, and content seemed like the best way to do it. So I actually started a podcast, just like this one, and then got into YouTube, and then TikTok, and Instagram, etc. So that's where we are today.
So talk to us about your first deal, that first entrance into real estate. What did that look like?
Yeah, so the very first piece of real estate that I bought was actually my mom's house. So she was about to move to Taiwan. I love that house. I grew up in it. And I said, Mom, I can't let you sell this to some stranger. I'm going to buy it from you. And at the time, I was living and working in Los Angeles, and this property was in the Bay Area. So I thought, okay, I'm going to keep it as rental property, whatever, I'll renovate it. And then somehow, by some fate, they needed someone to move to the Bay Area. And I was like, oh, okay, I'll accept. It's funny because they went through all the ranks, right? The managers, the higher levels. But everyone said no because they were satisfied with their life in LA. And I volunteered. I said yes. And so, yeah, fate had it. I moved back to my hometown, lived in the house that I bought, and I had all these extra rooms. I thought, well, it's super lonely here. I have all my friends in Los Angeles. I have no one here in the Bay Area who wants to live with me. So I started recruiting all my friends, anyone that wanted to work up in the Bay Area. I said, oh, I have a place for you to stay, super low rent, come live with me. And as they moved out, I started getting coworkers in there, and that was house hacking, right? It just kind of happened.
And when was that?
This was in 2015, 2016.
So you were doing house hacking, because I was house hacking around the same time too.
Yeah.
But I didn't realize it was called house hacking. I think it was actually coined a little bit later. So you were kind of house hacking before it was cool too.
I guess so. But actually, it's funny because during that time is when I realized the power of real estate, right? And I started consuming a lot of content, right? A lot of podcasts. And I actually heard your podcast. So you're one of my inspirations from back in the day too.
Thanks. I appreciate that.
After that first deal, that got you into real estate, that sort of wetted the whistle, if you will. How long did it take you to go do your second deal? And what was that?
Yeah. So I would say the second one is truly my first real estate investment because this time I'm actually buying for investment purposes. It actually took me over a year. So during that year, I moved from Los Angeles to the Bay Area. I was house hacking, and I started to understand, okay, real estate sounds like a really good thing to get into. That's when I was pouring myself into podcasts, books, but most importantly, meetups. So I was attending the local meetup groups in the Bay Area and just joining all of them. So they maybe meet once a month, but since there's so many groups, basically every single week there was another meetup to attend to. And the real estate investing community is pretty small. So you see the same faces over and over and over again. And it's really cool because you can talk to these people and they can give you advice that isn't found in books, right? No one's going to tell you on paper or on recorded message to do this, and that, right? It's a little bit of a gray area. But in a casual conversation, they'll tell you, oh yeah, just do this, you know? So it was really cool to make friends in that community, but I also created a good support group too, right? Like I wasn't the only one out of everyone I knew buying real estate, which is a very scary thing to be in. Instead, I'm part of a community of people buying it all the time, like it's no big deal. So, it took me about a year, but eventually I bought my first rental property over in Florida. So on the other side of the country, sight unseen, not even meeting my team in person until way after I bought the properties. But yeah, that was a simple rental property over in Jacksonville. At the time, it was going for around $80,000 and I already rented for 900 something. And the cool thing about that particular deal was that it was already rented out to tenants. So I knew that no normal home buyer would buy it. It was only investors who would buy it. So that even gave me a bit of a competitive edge to buy the property in the first place.
That's awesome. Do you still have that first property today?
I do. And now that $80,000 property is worth over $250,000.
Yeah, I bet.
Yeah.
Being in the Bay Area, right?
Well, actually, that property is in Jacksonville, Florida.
Oh, the Jacksonville one. Okay. Do you still have your Bay Area property today?
Yeah, I have that Bay Area property. So it's funny. Yeah. So now, my wife and I, we moved from the Bay Area to Dallas, Texas. But again, that's my childhood home. I'm not going to sell it. So we actually converted it into a midterm rental. Because like in the city where I have the property, you can't do like regular Airbnb. So if you do a 30-day plus situation, then you can do whatever you want. So we're renting it as a fully furnished rental.
Now, we have a few clients in the Bay Area, and they have done extremely well since 2015. I presume that your property also has done extremely well from an appreciation perspective.
Oh yeah, for sure.
It kind of actually the last like 8 years kind of puts in perspective cash flow versus appreciation. It's almost just, do I have enough cash flow to pay my debt service and my expenses and maybe a little bit on top of that I can pocket? Because if I can hold long enough, we're gonna run this thing up. Maybe that's just the Fed policy of easy money, but that's kind of been my observation over the past 8 years. Well, tell us how big is your portfolio today?
So right now, my wife and I own 34 units. So it includes our primary residence, but again, because we move so often, like this house right here is going to be a rental in like a few months, right? Then we'll buy another property and live in that, and that'll be a rental. So total 34 units.
Good for you. And
are you geographically concentrated? Is it mainly Jacksonville? Is it mainly the Bay Area?
Yeah, so we have properties kind of spread across. We have some properties in California in the Bay Area. We have properties in South Georgia. We have properties in Florida. We have properties in North and Mid Texas, right? Kind of all across in different cities.
What was appealing about the Florida and Georgia markets?
So when I was first getting started, it's very hard to determine where you're going to buy. You get this like analysis paralysis because there's so much opportunity out there, right? I could have bought in Cincinnati. I could have bought in Florida. I could have bought here and there. For me, when I was very first getting started, I really had no idea how to do like a lot of demographics analysis, whatever. And I was just going to the meetup groups and they would consistently show like, here's top 10 places to invest in. And so Jacksonville just happened to be in those top 10 lists every single time. It wasn't always number one, but it was somewhere there. And I figured the other ones that were also on that list consistently were in locations that I didn't feel comfortable investing in as a first-time investor. These are places that typically had like snowstorms or tornadoes. At the time, I felt like Florida's kind of like California, not really thinking about hurricanes. But luckily, the hurricanes haven't damaged my property. But now that I own properties with like ice issues and snow issues, like I was glad that my first property was not in one of those terrains.
Our episode 1 guest, Taylor, has pretty much a fully concentrated portfolio in one place. And he talked about just the expertise that he's built up in that market over the past 10, 15 years and how he can go sort of block by block and know what the rents are and know what the good neighborhoods are. You've obviously taken a different approach. You've invested across a wide swath of the country. Sort of how do you weigh sort of the trade-offs between geographic diversification, sort of chasing opportunity in different cities versus like becoming like a real expert and leveraging that expertise as your competitive advantage?
Yeah, that's a great point. I think honestly, like if you are super, super good in one area, then no matter what the economic conditions are, you should be able to make something happen. An example of that, a lot of my friends who were in those Bay Area real estate meetup groups, they only flip in the Bay Area, right? They don't really buy out-of-state properties. They only do stuff. But because they're so good at that, they can find good deals and they're consistently making 7 figures a year, like doing stuff in the Bay Area. My approach to it is I personally am not, I'm not the kind of person that goes block by block and knowing every single city. Instead, I prefer to diversify my overall portfolio because, I am worried, right? What happens if something doesn't go well in Jacksonville? What if there's a crazy hurricane that destroys all the houses there, right? We like having that spread out diversification. And it's also cool to be able to travel to different locations as well. I guess, that's it in a nutshell. But don't get me wrong. While we are in those markets, my main focus is building up the team members who have that expertise and the knowledge, so I can rely on them to help me. I can basically leverage their knowledge to help me with my assets. So I think the biggest part is creating a good team, right? That's what's important to me. And opening to different markets, the hardest part is creating that new team. So we're not like always trying to spread out, but like that's kind of how we've naturally grown slowly over time.
Let's say I am working and living in the Bay Area. Real estate prices are astronomical, and I want to look at a market that's not in California. How did you first identify these other markets? What sort of advice do you have for somebody that's trying to figure out where can I invest in the United States?
Yeah. So again, I think there's two ways to do it, right? It also depends on how much time you have and how much do you really want to dive deep into it. Like the easiest way to do it is just do what I did when I was first getting started, where you look at these top X lists, top 50 lists, top 10 lists, whatever. And that's good. It'll give you a good start. But the problem with that is everyone else is also looking at those lists. So the deals you're going to get are going to be, average at best. If you really want to find your own like niche market that no one's talking about and find the best deals and be able to negotiate on pricing, you have to do your own research. And so, I found this from just talking to a lot of investors on my podcast, but we do a lot of demographic work now, right? So we go on websites like citydata.com or Department of Numbers, right? We look at the jobs data, even the census, right? And you just want to see common trends. Overall, with real estate, it's relatively simple. If population is growing in an area, that means that more people are moving in. More people moving in typically means demand is going up, right? So rents can go higher, the value of the properties go higher. But in some cities, the number is different, right? You see people leaving it, population is declining. So then properties aren't as in demand, rents go down, prices go down. So stuff like that.
Something else that I want to add to that conversation real quick is just, if you are looking in other areas, something that you can do is to look at the annual financial report of the city. So if you were to Google like Raleigh, North Carolina, CAFR, it's a cumulative annual financial report. Those are audited reports that the city puts together, and it'll go through a lot of the trends that you just mentioned, as well as give you a lot of insight into what the city is spending their money on and what's coming up, like what's in the development pipeline and stuff like that. So once you identify a couple of potential markets that you want to jump into, that's another way that you can take a deeper look into what exactly is going on in the city.
So you mentioned that when you bought your first property, it was sight unseen, and you've also mentioned a few times sort of trust in the team. When you bought that first property, did you know your team? Like, what was that team? Had you met them before? Yeah. How did you vet them? How did you start putting them?
Yeah, great question. I would say when you're first getting started, the most important people to have on your team is going to be your real estate agent and your property manager. So the real estate agent or wholesaler, whoever it is sourcing you the deals. They should also have some local knowledge of pricing, negotiation strategy, right? Again, when people are buying homes for the very first time, there's a lot that goes into it, like understanding how to read contracts, understanding how to negotiate, understanding the whole escrow process. So there's a lot to consider. And I would say for someone who's just getting started, you don't need to go for like the super supreme number one deal. Just get a solid base hit, make sure the numbers are good. So at least you learn a lot through the first process. The other team member that you really need is a property manager. So this person is going to be in charge of managing your property, for years and years to come, putting in a tenant, screening it, and make sure that it is being rented at market value. So a reason why you should have a good property manager is also when you're looking for properties that your agent's selling you, you can just send it to them. Say, hey, is this a property that you would manage? Are there concerns for this area? What do you think it will rent for? Because that way you can put the numbers into your spreadsheets and see if it makes sense or not. So those two are the key minimums. And when it comes to sight unseen, the way that I also figured it was at the time, I was not a real estate expert. So you could put me in a house and I personally wouldn't know what to look for. I didn't do any construction work. I have no idea if this electrical box is good or not. So you hire an inspector. Inspection costs $400 to $700 depending on where you're at. And they'll show you, hey, here's all the deficiencies of the property. You can either take that and go, buy the property. You can leave, or you can negotiate with the the seller, say, hey, your property has all these things wrong. Can you give us a credit back to make these repairs? So there's a lot of flexibility there, but me physically going there was not really something that I found super beneficial.
If you own rental units but don't want to pay for expensive software, check out Azibo, the smarter way to manage your rental properties. With Azibo, you can automate rent collection, find quality renters, simplify accounting and tax prep, get a bank account designed for real estate investors, and save on rental property insurance. All of these services are free through Azibo. Join thousands of real estate investors who trust Azibo to manage their rental business in one convenient platform. Sign up today at azibo.com/HRE. That's azibo.com/HRE.
How did you find your first set of, so you talked about what to look for, but how did you actually find that in Jacksonville property manager and real estate agent who you trust?
Sure. So actually I used BiggerPockets for my very first one. I wanted BiggerPockets. I did this for many cities actually, because I was interested in a few, and I would just make blog posts and I would say, hey, I'm this investor, I have this, and this, and I'm looking for this, and this. What are your thoughts? And a lot of people are very helpful, and they would reply back to that thread. And a few of them, naturally are property managers and real estate agents because they want business. So then I would actually call and talk to many of these people. And just by talking to 10 people or so, you can get a feel of who jives with you and who doesn't. You know what I mean? There's some people who are more reserved. There's some people who talk way too much. You know what I mean? And there's people who BS you. You can kind of sense it out and find people who you really like working with. Then when you find one guy that you really like, you can ask for their referrals, and they can refer you to better people as well.
So you live in Dallas. You've got property in Florida and Georgia. I presume that those properties are being managed by a third-party property manager. Mm-hmm. How do you hold them accountable? How do you manage a property manager from a distance?
Yeah, great question. So with 34 units, naturally, that's a lot of things to look at.
Right.
So right now, my team is set up where every single month, I have a virtual assistant who goes through all of the portals that we have. So that's something that, you don't really think about when you're first getting started, but every property manager does things a little bit differently, and they'll have different reports based on how they do things. And consolidating that can be of a pain. That's why I hired that work out to someone else. And actually, we use Azibo to combine all of our information into one dashboard so we can review everything. And during our monthly reviews, that's when I can notice something that's out of whack, right? Oh, this repair seems abnormal. It's high. What is it? Then I'll go to my property manager and ask what's up. Most of the time for long-term rental properties, you do not have major issues. Maybe once a year you'll have AC go out. Okay, new roof. Fine, I know what that is. But then you notice some problem properties, right? Oh, consistent repairs here and there. And that's when I have to have a conversation with the property manager and ask what's going on. Again, with real estate investing, it really is like a team dynamic. You work with people, so you have to be good at talking to people and coming up with solutions together.
And when you do see the properties with the consistent repairs, you're having a conversation with your property manager. What are you typically at? What does that conversation look like?
You just ask what's going on here. And then you say, is this going to be an issue? Is this problem resolved? You want status updates. I'm not one to usually sell my properties. Sometimes if it's really, really bad, we could consider it. But we just try our best to make sure that it's done, or it's done right. If there's consistent repairs, I might tell her, hey, whoever you hired, you got to get them to go back and do it for free or for less pay, right? Because you didn't do it right the first time. Just stuff like that.
Do you ever go walk the properties or have your property manager send you photos or videos?
So again, I have walked properties before when I'm visiting town. And if it's a major issue, sure, they'll send us photos. But again, it's usually not the case. Most things just get handled on the back end.
Got it. And so from an operational perspective, you said you're using Azibo. What does your team look like, and what sort of tools are you using to manage your 34 units?
Well, like I said, it's usually just one guy, and he goes through all of our portals, right? Every property manager has a different portal, like Rent Manager, Appfolio, Buildium, whatever, and then you just get the reports, write it all down, put it in Azibo, and then it's all in one place for us to look at it.
Got it. So they're going to each individual Appfolio, Buildium portal that your property manager has. They're looking at that, I guess, the PDF statement.
Yep.
And then they're manually kind of keying it into Azibo or...
Yep.
Yeah. Interesting. Yeah, that's been one of our big pain points at our CPA firm with real estate clients is just that when you get to the level of syndication fund and you're talking about millions and millions of dollars, they have professional property managers who do a lot of the accounting for you and send you very professional reports. But for like you and me, if we're not doing that, then we have a lot of property managers who are in all sorts of different markets and use different software stacks, and they just give you these PDF reports. So the question is, how on earth do you get all of that information out and into some sort of accounting system so that you can start tracking things on an ongoing basis? But you have a VA. Where's your VA based?
Philippines.
Philippines. And how did you go about finding your VA?
Yeah, so there's this website called onlinejobs.ph. I use it all the time whenever I need to find a new teammate. You, instead of going to like a firm, onlinejobs.ph connects you directly with them. So then it's up to you as like the boss to interview all these people who apply to your positions. And
do you use Online Jobs PH to also help with your marketing, the content creation that you're doing?
So again, my structure is I have, one main VA who's kind of like my guy. And then I have editors who are more on a contract basis. So every video I put out, I pay them a certain amount. So yeah, basically I only have one guy right now, and he does everything I need, whether it's content, whether it's checking out my rental portfolio.
Wow, whatever, that's amazing.
I mean, I've been with him for 4 years, right? And I've helped him grow. He's helped me grow. So he's like my only guy that's on salary. And then he's just more flexible so he can learn new things here and there. But you got to train people, right? And give them the responsibility slowly, not here's everything at once.
Well, let's talk about that for a second. So if I'm a new investor, and let's say that I've picked up a couple properties and I'm thinking, man, I need some help. I want to go look into that outsourced VA option. What are common mistakes that you've seen other people make when hiring anybody from the Philippines or really any other offshore country? Mistakes.
I mean, I think not vetting someone. I mean, I think this is the same regardless if you're hiring in the Philippines, hiring here in the United States, right? It's you need to vet your team members before you bring them on board, and also make sure that they have just the right amount of access to your accounts based on their trust, right? Like if they're a brand new person, I don't know if I would give them like all my passwords right off the bat, right? Definitely not your bank account statements. Mm-hmm. With, my platforms, seeing my monthly reports to me is not a big deal. So I give him full access to my portals for my property managers, because I know that he can't just go to my property managers and like steal funds from me. Same thing with Azibo. Like I can give him access to my personal Azibo account because, he doesn't have access to my actual bank accounts. He only has access to the read-only view. So that's probably it. I think, honestly, it's more of you got to be careful with yourself, right? Like, are you hiring for the right purpose? Do you know how to lead a team? Are you just going to like dump random things on someone who has no idea what's going on and expect the world? Because like that's not going to happen, right? You have to be reasonable with your requests. Again, I was with my guy for 4 years and only slowly brought him into what he is now, where he's fully integrated with my systems.
It sounds to me like you're fairly hands-off in a very good way with respect to sort of like the day-to-day operations of your real estate portfolio. Mm-hmm. What decisions, if any, do you have to make from like a day-to-day operational perspective?
As far as the long-term portfolios are done, like if they're done and they're in the property manager's hands, I usually don't do much. But again, if there's anything weird, I do have to go back and talk to property managers. We are still doing projects. For example, my wife and I, we bought a property just 15 minutes of our home here in Dallas, and we're doing a full renovation. So it's a full gut job. And of course, that one requires a lot more effort from us, mostly because we want to do it, right? We want to have the design choices. It's kind of fun for us. It's kind of like flipping houses, except for it's not because we're not selling it. So we're doing that, we're doing that for the real estate side. Luckily, again, long-term real estate investing does not take a lot of your time. So as long as you're good at finding deals and being able to execute when you need to, once that's done, it's set and ready to go, and you're just earning your passive income.
Let's kind of change gears and think a little bit more forward looking. What are you doing in 2023? I mean, are you still in acquisition mode? Have you kind of pressed pause? I mean, we just had this banking crisis over the past week. Like, how are you feeling?
Yeah, I think real estate in the long run will always be good, right? So that's my core philosophy. The core philosophy is I don't want to be super active and like worrying about the day-to-day minutia. So what that brings me to conclude is that if I can find good deals and only care about how the market's doing, if I feel the deal is really good, we can still pounce on it. Now, the way you buy it may be different, right? So like we're not out there leveraging and getting the highest loans like we used to. When we were first getting started, I was getting 80% loans, maybe 90% loans with a hard money loan. Now we're actually buying a lot of properties in cash and we're funding everything in cash. And then we know that, okay, our money's in here. Maybe down the line we can refinance, maybe not. Like we don't really need it. So that's kind of what's different. I know a few years ago, we were really into the acquisition mode. So we were buying a lot of properties. We were doing with a lot of leverage as well. Now I think it's more about slowing down, stabilizing our portfolio, making sure that they're all performing really well. This is like the year for us to make sure that if we need a new roof on the home, let's put a new roof on the home, all that kind of good stuff. So that's what we've been doing. We bought this property about a month ago. We're renovating it. But after that, we may slow down on acquisitions until we see what happens maybe in 2024.
It's a theme that I've heard from many investors is that this year is the year that they're buckling down and really focusing on operations because the money is not as easy as it used to be. So it compresses margins and you really got to make sure that you've got great operations in place. And it sounds like you're ahead of the game there with your outsourcing philosophy. So kudos there. I want to switch gears real quick and just kind of talk about your content stuff because I mentioned it very briefly at the beginning, but you are a prolific TikToker. I haven't checked you out on the other platforms, but I was doing TikTok, I think it was early 2022, and I kept stumbling across your stuff, and I was like, oh man, Sean knows what he's doing. I need to model my TikToks after him. I didn't have the consistency on TikTok needed to blow it up, but I'd just love to hear from you. Why create content? What's the purpose? And then I've got a couple more questions for you. Yeah, we'll start.
Yeah, for sure. I mean, I give you the long and short of it. Basically, my wife succeeded in TikTok first. And when we first met, she was doing more of the blogging side, and I was doing more of the podcasting side. In 2019, we started to do YouTube videos, but it took me 3 years, and I got maybe 7,000 subscribers. But then she started doing TikTok in the middle of the pandemic, and her account blew up to 100,000 people. That's insane at the time, right? And flash forward to maybe 2021, she's been doing it for about a year now. And I got prodded and goaded. I said, okay, fine, I'll try TikTok too. And probably like you, I tried really hard. For 30 days straight, I made one TikTok video. And the first 10 days were great. I had great content. I was doing stuff, maybe getting 200 views, but whatever, it is what it is. But then the other 20 days in the month, I was like, man, I ran out of ideas. I have to make another video. And you end up just putting out garbage, right? For the sake of just putting something out there. It's what happens.
Yeah, I can confirm.
Yeah,
for
right.
Me, not for you. You put out great content, but me, so I'm just like, okay, I'm out of ideas. What do I do?
Yeah, so you just post something random and it doesn't go anywhere. So that was my first 30 days on TikTok in January of 2021, and it didn't really go anywhere. So then I took a break. I said, you know what, TikTok's not for me. Let's continue with the podcast and YouTube videos. And then in November of 2021, my wife Sharon, she had an opportunity to work with the ByteDance team, which is the head parent of TikTok, over some like live promotion. So they're trying to get people to do more lives. But then they actually shut that down and said, hey, we actually want to try this like new creator branch. And maybe Sean, she suggested me to try. And they said, yeah, sure. And all they really did was give me a regimen, right? They didn't actually help me with the algorithm or anything. They just said, here, do this many times a day, and boom. And so I stuck to it. So all it was 2 videos a day for the first 14 days or whatever. And you basically have to just find the best videos in your niche and make your versions of them. That's it. Of course, make your profile nice and everything like that, right? You have to establish yourself as a good channel. And for the first 2 weeks, I was getting under 1,000 views as well. So I was thinking, man, this is a failure. And the ByteDance team was also losing faith in me. But then somehow one video popped off, got 10,000 views. They were saying, wow, this is great. Then later, another video got 100,000 views. Oh my God. And then another week later, another video got 12 million views. It's insane. So my TikTok channel blew up from 0 to 1 million within 3 weeks on TikTok. And it was insane. So then I understood the pattern. Okay, I know what people want. I just tried to model more videos based on that knowledge. And then now, on Instagram, I have 1 million followers. On YouTube, I just hit 400,000. And it's all from the same content. So yeah, I understand the short form content pretty well now, but it really was, it's not inherent, right? I had to learn over time and really try it out.
So if somebody is trying to get into TikTok or I guess even YouTube, you would say, if I just heard you right, and so correct me if I'm wrong, you want to look at what are the top performing videos or pieces of content in your niche, model those or do your own version of them and do it consistently. And other than that, there's really no secret. It's just consistency.
And also making sure you're not putting garbage out there, right? It has to be planned. So it's not so much that you have the same video, but to our extent, we script every single line, every single word, because even if you take a breath during a TikTok, they can leave. So you can't even breathe during TikToks. And editing has to be on point too. So I even have this big green screen in my background right here that you can pull up. So like it's a whole thing.
Amazing. And what opportunities has all of that opened for you?
I mean, tons, right? Like I'm able to hang out with you guys here.
Yeah.
I mean, real talk, like even from the real estate perspective, when it comes to working with new agents, when it comes to working with new contractors, they see who we are and instantly gives us some sort of credibility. Versus I remember when I was first getting started with real estate, they say, oh, we're not looking for new clients right now, or oh, like I don't really want to work with you and find your deals because like who are you? But now they're like, oh, we can work with these people. Cool. And also has connected us with some pretty big real estate investors as well. So I mean, all these things just help overall.
Do you find that you're also getting access to sort of like off-market deal flow, or is that less of a thing in sort of the areas that you're in?
Yeah. So like off-market deal flow and private money, like we get offered that all the time. The question is, do we accept it? And for now, it's been no. Like I haven't felt comfortable enough to accept private money from random people yet. And same thing with deals. Like if I'm not in the market, you're giving me a deal from Columbus, Ohio, but I'm not there. I don't really want it. Like, I only want deals in my market that I know.
Yeah, I mean, accepting private money is a completely different ballgame. We see clients struggle with it where they've been really great at their own stuff, and then accepting private money, you have to have really great systems in place, right? Financial management systems, communication systems, people systems. So it's just different. It's a transition.
And that's where it is too, because we've accepted private money from friends and family, and I know how that conversation goes if something goes wrong, right? Projects get delayed by a few weeks. Okay, you have overruns for a few $1,000s. Maybe a deal lost money. How do you have that conversation? It's really tough with a friend. Imagine what it's like with a stranger. And they threaten about suing you or whatever. Like it's not something that I want in my life. Like I don't need this extra deal. I don't need the extra money. So why put this extra burden on my life when I'm chilling?
Yeah, I took some money from friends when I did my last startup, and that was not a fun conversation when I said, hey, I'm shutting this business down. We're not finding the right traction. Here's 20% of your money back.
So at least you got 20%,
Yeah.
Maybe we should talk about that sometime. That's probably a great story. I mean, not like, the result's not great, but I'm sure there's tons of great learning lessons in there.
Mm-hmm.
Oh, learned a ton. Absolutely. And definitely I'm questioning my decision going forward on taking money from friends.
Yep.
Sean, tell us a little about why content. Like you had this great thing going with real estate. I mean, you still have this great thing going with real estate, but why go and add this like next layer of creating content to this?
So I think it all stemmed in around 2018. I had just come off a really big flip and I did pretty well for myself. But then I felt kind of empty afterwards. It was kind of weird. Like I remember working so hard to get a promotion at my job, and then this one flip just made like 3 times my salary at my work. Didn't make sense. And then I thought, man, why isn't everyone doing this? It also felt kind of strange. But another thing that was weird was that, my contractor didn't really make that much profit, neither did my real estate agent. So only I won. It left me feeling pretty empty inside. So I wanted a way to give back. And so I figured, okay, a podcast would be a great way to do it. And the cool thing about podcasts too is that you can invite someone on your show. You can ask them all the questions that you personally want to hear for your own knowledge, and then share it with the world. It's much better than asking someone, hey, do you want to, get lunch with me someday? And they're like, I don't want to really drive to wherever to just talk to you for lunch. But for a podcast, they're like, yeah, sure, I'm down. So it helped me in many different ways to learn more about real estate investing, to give back to the community, and it was just fun to do. So naturally that transitioned into just making videos and then content in general.
So in the real estate space, so it sounds like, so you flip, you have long-term residential, you have midterm residential, you've clearly looked into Airbnb. So you're playing across a fairly wide spectrum of different types of investments. Are you all residential? Do you also do commercial? Are you looking at other land development? Like what else in the real estate game have you looked into?
Mostly it's been residential for now. I've tried to break into commercial, but it's been a little rough. So for the past few years, especially around 2018, I feel like the commercial multifamily space has gotten really, really big, right? With like Joe Fairless talking about it, with like Grant Cardone talking about it, that it just didn't make sense. Like you can buy this multifamily property and on a per unit basis, you're getting less money than if you bought just single family houses for the same unit count. So it is weird. Like I might as well get single families if that's the case. So that's what happened so far, but I'm definitely not opposed to it. In the future, if deals make sense, I can finance it, but I'll go for it.
What about like retail, strip malls,
Okay, I haven't gone there.
small business?
And I'm also not so I'm not so sure about that one. I'm not sure if retail is going to come back in a very big way. You go to malls and they're mostly dead now, and unless you have some cool like swanky spaces, yeah, retail is a little weird. But I mean, people do love triple net stuff, right? It's just maybe not for me.
So still sticking to, it sounds like, mainly single family homes and looking into multifamily commercial, but haven't found anything promising.
Yeah, I mean, we have some fourplexes here and there, but most of them are single family.
At the sort of beginning of the podcast, you mentioned that you went to these meetup groups, you had conversations with people. They were willing to tell you things that they weren't going to write down. Is there anything there that you're willing to tell our audience?
Yeah, sure. I mean, it's nothing like too crazy. It's more like the logistics of things, right? Like, do I need to pull a permit for this and that? You're right. Oh, how do you 1099 somebody, right? Like, I didn't know how to do that stuff when I was first getting started, right? I have no idea. And some people are like, oh, nah, it's just under the table money, right? That's why it's cheaper, or stuff like that. Like it's nothing too crazy.
Yeah. I had the same experience when I was in Maryland. There was like lead paint laws, and the local real estate society they would tell you like the lead paint laws are important, but the reality is that if you just Windex your windowsills, rub them really hard right before the guy comes to inspect them, then generally you pass. And that was always an interesting conversation. So yeah, so go to your local real estate meetups because you can get the local tips. Don't do anything illegal or bad or wrong, but definitely go and engage in the local community because you just never know who you're going to meet too, right? And
I think the cool thing is you can also just ask your random questions, and you can't really get that from listening to a podcast because they might not talk about your specific problem.
Yeah, and you can get referrals and stuff
same
too,
exact dynamic.
Mm-hmm.
Yeah, it's the same exact dynamic in tech startups with founders. Like you go get a few founders together, and you're gonna get to ask all the questions. You're gonna hear all the questions, and you're gonna even the sort of like quote unquote boring operational stuff that you absolutely need to know to run your business that no one's gonna write a blog post about. Like how do you 1099 people, or do I really need a contract for this, or like, do I really need this level of business insurance? My lawyer is telling me I do, but does it really matter? And all those sorts of like the things you only learn by being in it.
Exactly.
Right?
The best lawyers are the ones that you absolutely love when the time comes. So what do I have to go through this whole thing? And then something happens and you go, man, I love my attorney. Here's a little gift basket. Anyway, let's close this out. So we've got 3 final questions for you, Sean. The first is, what is your favorite book? It can be real estate, doesn't have to be real estate related.
Yeah. So I used to read a lot of books, inspirational books, how-to real estate books. But lately I found myself really liking autobiographies. And it's because you can like put yourself in some really successful person's shoes. And when they encounter a situation, before they tell you the result, you can think, what would I do here? And you can learn from their experiences. So maybe when you're in that same situation, you can do the same thing. So that being said, I think right now, Shoe Dog is probably my favorite book. It's by Phil Knight, the founder of Nike. Again, because he had very humble beginnings and then created a very big empire.
Have you ever read
I second that one. That is a fantastic
Shoe Dog?
Yeah.
I'll check it out.
Great if you
I've
should
not
read
read it. Have you ever read the, I think it's the Almanac of Naval or something like that?
Yeah.
You've read that one too? I've seen that one floating around, and it's been on my list. So
actually, it's good for content creators because he talks about permissionless growth or something like that. Basically, like right now, you can do whatever you want. You don't have like a boss telling that you can only go so high, right? With us, real estate investing too, you can do as much as you want, and no one can tell you no.
Huh. Very good. Love it. What do you think is more important with real estate investing, cash flow or appreciation?
Okay. So for this one, it's kind of a mix, right? I think cash flow is very important up to a certain amount. So for example, if you're first getting started and you want a way to quit your job that you really, really hate, then cash flow is super important because it gives you the freedom to do whatever you want. However, after a certain point, you actually don't need that much cash flow, right? Like after $10,000 a month, I don't need more cash flow to then live my lifestyle. Instead, I want the appreciation to boost my net worth significantly. Like you mentioned earlier in the podcast, the property I have in the Bay Area is probably 1/4 of my net worth, right? Because of how much it's grown. And I only paid, so much for it, but because I got it with a loan, that money has appreciated with leverage. So it's grown exponentially because of that. So again, long answer short, cash flow is important up to a certain point, and then appreciation.
I know we're in the closeout section, but I do have a follow-up question on that one. So you mentioned that you're currently buying homes with cash. When you do the math on those homes and you're looking at the cash flow, are you doing the math with an assumption around a mortgage at some point and looking at if the cash flow will cover a loan if you wanted to take one? Or are you looking at it purely from the perspective of 100% equity?
Yeah, great question too. So we do think about that, right? We have different exit strategies, and we want that to be an option. If we decide to take a mortgage on the property that covers all the money we put in it, will it still cash flow? But even if you think about it, if you can buy a property, fix it up, and do the cash out refinance and get all of your money you put in, and it still cash flows even just a little bit, that's really good because technically you just got a house for free that cash flows, that continues to appreciate. You know what I mean? So in that sense, we're not like super worried about the minutia of the numbers here and there, but as long as the overall numbers work out and it makes sense, then yeah, we'll still do it.
And you're getting that principal pay down.
Exactly.
Right? So you get a principal pay down for free, a little cash flow for free, and you got all your money back. I love it.
Mm-hmm.
Love it. All right. Final question. What is one final tip you would like to leave for our audience? If there's one thing that you want them to know or take away from this conversation, what would that be?
I mentioned this many times before, but you got to start attending your local meetup groups. Go to meetup.com, go to your city, find some local real estate investors, hang out with them because they not only provide books and podcasts provide the logistical support. Okay, how am I actually going to do this? How do the numbers work out? But the meetup groups give you the emotional support. So you have a community of people who can help you. And even if things fail, right? I've had failures before. I went to my real estate meetup group guys, and they totally understood where I was coming from. None of my other friends could understand, but all of my real estate guys were like, it's okay. Same thing happened to me. I lost X amount of money. We're all going to be okay. And I'm like, yeah, okay, it's all good.
That's great. And Sean, I've become a hermit after the pandemic, so I'm going to have to go and take your advice and look at some Raleigh local meetups to go and start attending. I appreciate that.
Yeah. I mean, there are Zoom meetups too. You could always do that as well.
Yeah. Well, Sean, tell our audience where they can find you. Be sure to plug your awesome content.
Yeah, sure. So you can find me on YouTube, Instagram, and TikTok with the handle @SeanLovesRealEstate. That's SEAN Loves Real Estate.
Thank you very much for coming on the show today. We really appreciate it.
Yeah, Brandon, because thank you so much for having me. Appreciate it.